All right. Hey, everyone. Hey, Shashank. No problem. I understand. Oh, thanks for joining. Just want to make sure you guys can hear me okay. Thank you all for joining me for another Greenbridge Investing market analysis. So in today's session, I know I'm running a little bit behind, so I'm sorry about the time because I know it's, everyone is in all these, crazy time zones. So, yeah. So what I want to do is I want to go over Bitcoin in this session, and because I'm sure a lot of people are a little confused, especially when we went from yesterday, during our podcast, the thing was pushing 12,000, and then like overnight, it's back to like, 11,200. So we're going to talk about that and a couple of different scenarios that we need to consider as the week continues forward. Also, I just want to ask you guys real quick, how is my sound? Is my sound okay? Because I've been trying to make some adjustments here to my microphone so that I can improve it for the Talking Market Show. It's usually better on this podcast, but I think I know why, and I thought I had the problem solved yesterday, and it wasn't solved. Anyway, so just let me know if the sound is good. All right, so with that being said, if you have a stock symbol or a market that you'd like to see, please share it in the channel now. Thank you, Ankit. Yeah, and I think the reason is because of the placement of the mic. So if I'm talking to you guys from over here, how is the sound? The sound is probably not as good, right? If I talk to you from over here, and I think that's what's going on with the podcast, because my microphone is not in the same position as it is when I'm doing these. So right, so when I'm talking like this, I'm right up on the microphone. All right. Anyway, so I should have that solved for the next show. Anyway, and thank you guys for participating and joining us for the show. So anyway, again, if you have a symbol, a market you'd like to see, please share it in the chat room now, so that I can once I complete my analysis, I can go over what you want to see. All right. So with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, straight to the Bitcoin chart. Now, remember, you guys, what I've been saying in the chat room. Right, so you guys are saying my sound is good here, but when I'm talking over here, I'm betting that my sound is not as good. All right, so tell me if you hear, tell me what the sound is like when you hear me like this. And now I'm going to come back where you guys say it sounds good. All right, just let me know. It probably doesn't sound as good, right? It probably sounds similar to the podcast when I talk to you from over here. Okay, anyway, so yeah, put your symbols in. And so I first want to go over Bitcoin. Then I want to cover some Forex because we sent out that trade of the week, that dollar franc. And I want to talk about that, and also with the euro. I want to talk about gold, of course, the NASDAQ. And then, we'll get to your stocks. I have a couple of stocks, too, that I want to take a look at. So let's get into Bitcoin first. Now, so we took the signal at 655, right? We had that 655 buy signal that pretty much went off on Sunday. And everything was looking good. Then we got this. So when I see something like this, again, remember, I've been talking about this resistance zone that we've been in for some time. Obviously, okay, right. So, and I think that's the problem with the podcast is the mic is not close enough, because if I get close to the mic, you won't see me on the camera. I think that's the conflict there, but I think I have it fixed. Anyway, so I've been talking about this resistance zone, this 11,600 to 12,300, and buying in this zone is obviously a riskier thing to do. Now, we have been aggressive. We've been aggressive around this zone. The reason why I've had no problem, usually I would be a little more conservative with something like this, but the reason why I've been more aggressive, meaning I'm willing to take buy signals in this area, is because, for one, we're holding this 11K support. Okay? Yeah, what I'm looking for in this thing is, for one, that 11K needs to hold. So if we get another bullish fake out here, meaning, we got this ugly bearish candle, which is going to get a lot of people confused, and it's going to get people shaken out of their coins, right? That's pretty much noise. And it's too early to judge, though. All we know is it hasn't taken out that high or low support, so it's still in this range. You're going to have people on the internet saying things like, oh, head and shoulders, bearish, Bitcoin's going back to 3,000, all that reactive nonsense, really, okay? So at this point, we can't say any of those things. All we have is a bearish candle, which is large, but that's not really a huge surprise considering, you know, we are in this zone, which this type of price action is not unusual. Now, there are two scenarios that I'm looking for as far as being in our favor. One, we get an inside bar here, and then, you know, we get a new buy signal off of that, which again will fake out the shorts, because when you see something like this, a big bearish candle like that, you better believe people are jumping in short. They're going to be piling into that thing because they think, okay, this is it, Bitcoin's now going to go to zero. But nothing has really changed fundamentally, and nothing has changed structurally. Okay, we haven't even taken out a support yet. So you have that situation. The other situation I'd like to see, if we get it, is maybe a fake out, where we get the failed low situation. We get a push that tries to push the 11K support, but there's no follow through. If we get something like that, that would also be a new long signal, which would be great for us. I mean, we don't have to add to our position. We're being conservative to begin with. So those are the two bullish scenarios. Now, if we do clear 11K, if we take it out, that's where, you know, and we close, meaning we close below it, and the next candle, the low, is taken out, then we're likely to revisit that 10.5 old resistance, new support. Now, we have our stop, you know, just below that support, because there's no reason to take all that pain. We just take the loss and we wait for the next signal. Stop losses are good. You know, don't feel bad about them. You shouldn't feel anything about them because they save you a lot of money. I mean, if you look at that dollar Canadian pair, if we didn't have a stop order in there, we would have been in a lot more pain. Okay, because that thing went like 100 pips lower than the stop. So stops save money. Now, so those are the things we have to watch out for. Now, yeah, we can argue that there's a lower high and this and that, but there's no bearish trend. This is not a bearish trend. The trend is still bullish. Now, one other thing I want to point out about Bitcoin and this situation is, this is why we always make it a point to emphasize not to overload on positions. Right, let's just take a look around real quick and see what's going on in the altcoin space. Right, okay, Link, pulling back a bit, right? Okay, that's expected. How about Litecoin? All right, Litecoin, okay. How about some of these other ones? What else are people in? How about XTZ, right? These were all the coins making headlines and grabbing people's attention, and now look, right? This is what I mean. Just the other day, we were talking about there were buy signals all over the place, and now it looks like garbage, right? That's why you don't overload. It's all the same trade. So people get excited and they think, oh, okay, I'm going to catch the next leg. This thing's going to go, blah, blah, blah. OMG is going to double, blah, 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 you know, and all that stuff. NMR, let's see that one. Oh, no, that's the wrong one. Hold on. Which one is that? And what was that crazy one that just recently went crazy? Was it, do I have the right symbol? NMR USD? Maybe that's what I have to put in there. Yeah, that one. Okay, there you go. Look at that. Look at this. So everyone goes crazy. Imagine if you bought it up here and now you're looking at this. This sucks. Okay? That's why you don't chase highs. And that's why when Bitcoin starts to move, you don't get overly anxious and take positions all over the place, because now you have to take a lot of pain. And if this move follows through, now you're caught. And it's not a pleasant situation. There's a tendency to be emotional. When you see 10 positions all in the red, you don't know what to do. You may do the wrong thing and start banging them all out, you know, at lows, which really, theoretically, you shouldn't do. But at some point, I mean, what if they go lower, right? So that's when all that worry and all that lack of confidence comes in, because you're too big, right? And that's why we always talk about that. And same with Forex. So I just wanted to make those 2 points about Bitcoin and compare to all those altcoins. You know, are these things finished? No, Bitcoin really hasn't done a whole lot. It just gave back that move that was developing. That's all. So, you know, we'll see if it's noise or not. We'll see how this thing closes over the next couple of days. And I gave you the 2 scenarios to consider. We're not going to adjust our stop. We're going to leave it where it is. If we get stopped out, we get stopped out. Okay? That's we predetermined our risk at the time we sent out the trade, and it's usually best to stay with that plan. When you start interfering with it, that's when you run into more complexity and unnecessary problems. All right, now let's first let me address the Nasdaq real quick. I'm going to jump over to the Nasdaq because the stock market again has been in this situation. I drew these lines on the chart. Those are inflection points. As you can see today, those are intraday points. Today it bounced off of one. This market doesn't want to pull back. I mean, look, we're at 12,426 right now. The high is 12,466. So this thing recovered off that low and is pushing those highs again. So this is going to be good again for your stocks. But like Andrew's been pointing out, he's been emphasizing shorter time frame type of trades, right? And it's wise to do that. Look, things like Workhorse, this thing pushed its first target, right? And now look at it. Today's low is what? 1780. So that's why we have targets, first of all. Take your money when you can, because now you got to deal with this noise. But the point is that NASDAQ is pushing highs, and stocks like this should be going higher. Now, here's one that I want to mention real quick. Look at this one. You all know Zoom video, right? I'm sure many of you use it for things. Were you guys aware of this gap? It was like $130 or some crazy thing like that. That's nuts. I just wanted to point something like this out again because this is the herd mentality. When something like this gaps after hours, who do you think gets caught in that? Who do you think gets caught in that? I'm sure, the day traders are in and out. The guys that know what they're doing, they're in, they make some money, on the follow through after the gap, and then they're out. And there's no exposure to now this. But someone gets left holding this. And those are those retail traders who don't understand how the herd mentality works or how markets work. They say, oh, good news. It's up 130 points. That means it must be going higher. Well, it's a tough one. For one, DJ, the puts are going to be expensive. On something that moves 130 points overnight, the puts are going to be very expensive, even unless you go like with $200 out of the money. So it's probably really not worth it. You want to buy puts. You want to buy puts in something that are cheap, and that have potential to get filled, but are not on It's not on everyone's radar. Okay, so stocks that are sort of off the radar, and you could get those. You don't pay much for those premiums, because when you get that broad market pullback, that's when you get that inflation in the put premiums, and that's really that's really what makes them worthwhile for the risk that you have to take. So you want cheap puts, not these are probably going to be in the hundreds of dollars, probably even $100 out, $200 out, if this thing has the ability to gap like that overnight. All right, so I just wanted to point that out. All right, and let me see, was there another stock? No. Okay, so let me go over just a couple of Forex pairs real quick, and then we'll get to your symbols. All right, so here's the dollar franc. Now, this was the trade of the week that we sent out yesterday for our podcast. I hope you guys enjoyed the what is this thing saying to me? Hold on. YouTube is not receiving enough. Oh. All right, my ISP has been acting strange today, so if I get cut off, it'll probably come back on. Anyway, so let me go talk about dollar franc real quick. We sent this out after the podcast, and here's the thing. So the buy signal, there was a much better buy signal a few days ago, but that was a tough spot. Yes, it was a double bottom, but this thing has been pushing lows and lows and lows, just like the dollar Canadian. It's been very difficult. So it's okay to buy when you get this type of candle, especially in this type of location, right? It's still worthwhile, but you noticed I used a limit order, right? So the high here is 91.36, the low is 90.84, and this thing has really not made much progress, right? I used a limit order on something like this, and I'm pointing that out for this reason, is because this trend is pretty much here. You could see the orders right here, right? Limit order 90.85. We didn't go anywhere near 90.85 yet, but because this momentum and this pretty much trend has been bearish, I think there's a good chance that this thing may fill. Maybe not today, but maybe going into NFP, maybe during NFP. We're going to take advantage of price noise because it's likely that this thing tests the middle of this range, okay? And that's basically how I'm trying to get into this thing, rather than buying an attempted breakout high in something that's sort of weak and then have to sit through it and watch it test the low again, okay? That's why I made that choice, and I wanted you guys to understand why I'm using the buy limit rather than a usual stop order. Now, I want to point out, let me jump over to the euro dollar real quick. By the way, do any of you guys trade Forex? Because I know, we send out Forex on occasion or pretty regularly, and I was just always curious. I don't know who takes these trades, so do you guys take some of these Forex trades at all? I mean, it's okay if you don't. That's okay. I just like to know. So look at the euro's in the pretty much exact opposite situation as that dollar franc. I mean, they're inverse to each other. Andrew talked about this bearish pin bar that we had developing, and he was looking at it as a short. Now, yeah, sure, it looks nice now, but these are tough, again, because you're fighting that trend, and if this thing finds some sort of stability, you may get another test of high. So in a situation like this, if you take this short, if you took something like this short, and we didn't call it, we didn't send anything out, we just have that dollar franc long idea. If you took something like this short, you need to be taking profits like right away, okay? Because you don't know if this thing is going to break any of these supports. None of these supports have been broken. So it may break the support, but there's no way to know. Now, all this action, all this price action is unfolding as we go into NFP on Friday. That's a very big report, like as I wrote in the email, if you read the email. And that report, who knows the outcome, and we don't know how the outcome is going to affect the dollar. It may be interpreted, like logic may interpret the outcome one way, but the market may interpret the outcome another way. It's irrational. So that's why you can't sit there and say, oh, NFP came out like this, then the dollar should be weak. Why is it going up? It all depends on how the market interprets it, and we don't know. So that's where price action can help us, and it's just, it's funny how these things are getting weak going right into that. So NFP can act as a catalyst to push this thing further, or it can cause a reversal, right? There's no way to know. And that's in that noise. Or maybe you'll get something like where you get like an outside bar where it tries to go both ways. Like it goes lower first and then it goes higher. It does one of those, right? And in a situation like that, we'll probably get filled on the dollar franc, okay? And then, of course, we'll need this euro to reverse back to the bear side again. So I just wanted to point that out. Florin, yeah, so I know that you trade Forex. That's cool. Forex gets tough sometimes. And that's why the month of August, we didn't really have a whole lot going on besides those dollar Canadian longs, which all got stopped out. So it's a tough process, but you just have to take it as it comes, Now look, here's gold. On, what was it, on Monday? I think it was on Monday. We talked about a possible gold swing trade, okay? And remember, you guys, I think, or it was Friday or Monday, and I said, this is a possible area where we can get an E leg. Remember I said we could count 5 legs in here? You can go back to the video and watch it, okay? Whether it was Monday's video, I can't remember which one, or maybe Friday's video. But in that video, we took a look at gold, and I said, I can count 4 waves inside of this consolidation, which means there's room for one more wave and that wave would be the E wave, because Elliott wave, in Elliott wave, you would annotate these with letters, okay? And that's exactly what we're getting here. This is why, although, you know, we talked about a potential buy signal here, we didn't send it out because, you know, because of that potential. And now we're sitting flat and waiting for a much better opportunity, okay? Kev, good question. What's the benefit of trading Forex? Well, Forex certainly provides another area of opportunities. It's very short-term oriented, and you know, it's like if there's opportunity there, why not, right? So there's no distinct advantage over like another asset class, something like, you know, whether you're trading stocks or options or whatever. It's just sometimes there's some nice clear buy signals. Like we look at it as pretty much everything trades the same, you know, whether it's Bitcoin, whether it's a currency, whether it's whatever. And as a swing trader, all I'm interested in is momentum. So if there's momentum in the Forex market and I can capitalize on that, why not? You know, so that's pretty much just more opportunities. Yeah, you know, it doesn't really matter because really the key, you know, if you're looking at, oh, the euro's only up, you know, 0.5% today or whatever, it's really not about that. It's about how much capital you put to work. And because, you know, in Forex, the instruments are very high leveraged, like typically 50 to 1. It used to be 200 to 1, but it's typically 50 to 1. Okay, and so you can tie up smaller amounts of money and capture decent moves. All right, yeah, so that's pretty much it. Now, so back to gold here. You know, now we have the potential where we managed to avoid this. This would have been a stop out, and now we can sit here and wait for a much better price, okay, in those 1850s. So that's what we're going to do. My point is, Elliott wave helped me see that and helped me avoid getting caught in that. Now, what if you took a buy signal on your own? What if you said, hey, you know what? Because remember that bearish pin bar, at one point in time there, that bearish pin bar wasn't a pin bar. You know, it was the thing was pushing its high. All right. So what if you got long in that situation and you're like, yeah, all right, I got the next leg in gold. This thing is going to break out, blah, blah, blah. And then you get the pin bar close. At that point, and I put this in the chat room yesterday, at that point you must exit the position. Okay? Even if your stop is 100 points lower or whatever it is, you must exit the position because chances are this thing is going to go to your wide stop, and there's no reason to take that kind of risk or take that kind of pain. You take a small loss or a small gain, and if you're wrong, if this thing fakes you out, you can always get back in. Okay? It's not like gold moves like, you know, it's not like a wild mover. So just something to keep in mind there. You know, pretty much trades like any other Forex pair. Those are the markets I wanted to cover. I think I pretty much got them all. Now, let's get into what you guys want to see. All right. By the way, if you guys feel that my analysis portion is too long, please just let me know, because you know I do these because I want them to have the most. I want these sessions to have the most value for you, and I'm picking like charts and stuff that either we have something going on in or potential trades that are coming. Okay, I don't just pick them just, you know, to waste time. So, but I want to always get that feedback from you. So if you're like, hey man, you can kind of shorten that a little bit. All right, let me know. All right, so let's take a look at what do we have here. I'm reading through the chat. So Grub. So DJ's asking for Grubhub. Now keep in mind, right? That NASDAQ is strong, and there are going to be buying opportunities in stocks still. I mean, you know, it's ridiculous and it's hard to believe, but we can't go into this with opinions, and we shouldn't ignore buying opportunities if they pop up. We just have to be tight on the risk, okay? We have to be prepared for the market turn, and that turn, again, NFP could be the catalyst. I have no idea, but most likely that turn will come out of nowhere. You need to be prepared for it, but it doesn't mean you should avoid all stocks together. Now, before I get into this, you know, a couple of points here on Grubhub. If you're new to the Greenbridge channel, make sure that you subscribe to the channel here so that every time I do one of these videos, you get an email notification from YouTube, and Like the video if you like the job that I'm doing here. Let me know that you like it. Also, check out our website at greenbridgeinvesting.com. We offer swing trade signals by text and by email. Remember, they're swing trades, they're not day trades. We also have portfolio management ideas that we often send out by email. And we have a chat room. Actually, we have a couple of chat rooms where we share perspective and insight each day, updating our trade ideas and potential ideas coming. And many of the people in here are in that chat room as well. So I just wanted to mention a couple of those things. And you'll find the links to this stuff. You can actually, at the bottom of the comment section of these videos, I put the links to the website. So check that out. All right, now, so Grubhub. Now this market just closed. And so here's the thing. I like the location, DJ. Nothing wrong with this location. You have the higher high. You have a higher low off of an inflection point. 72.78 is your old resistance, new support. But what I don't like is this candle closed weak. Okay, so I don't like today's candle. This thing should have given you a bullish close of some kind if it was going to be a buy signal at this location. So look, you got one part of the criteria met. You have the location. Great. Now that inside bar before it, you know, that's nice and everything, but we should have had a green close. So in the situation like this, like I said, you have the location. Wait for the next buy signal. That again can come in the form of a green. Maybe you get a pin bar tomorrow. Maybe you get a green close on this thing. But what's a little concerning though is the fact that, you know, that NASDAQ just refuses to pull back. And, you know, why are these things pulling back? So maybe they're just a bit behind. I don't know what their deal is. Like I said, no opinions. But I'd at least wait for some sort of confirmation of buying before getting involved in something like that if you're interested in a swing trade. Now, where do you measure your risk from? Well, you have today's low, 71.5. You figure, I mean, you have that level is going to be tight. You have this level here, which is 68.5, around there. So that's probably the better place, the more effective place to put your stop, around there somewhere. But then that's going to affect your reward risk. Okay, so, you know, here's your potential up here. We don't know if this thing's going to make a new high, but it's within reason to anticipate an attempt. But it's more reasonable and a higher probability for you to at least test the middle, okay, the middle of this move right here, which is around, what is that? $76, around there. So this is now where your risk reward comes into play. You know, if you're risking, let's say you get your buy signal tomorrow around, let's just say it's around 74-ish, okay, around there. You know, you're looking at what, like maybe $5 or $6 of risk to make, you know, $2 or I don't know, you know, unless your stop is a lot tighter, which obviously there'll be a greater chance that it gets stopped out. The risk reward is a little tough in here because I'm not anticipating that many of these are going to be pushing highs with the way the NASDAQ is going. I mean, I know that, I guess you could argue that that's an opinion, but it's just, I'm getting more and more cautious, not more and more aggressive. So, I mean, you can try it, you know, if you're interested in it, you can try it. If it behaves itself, great. If it doesn't behave itself, just be quick to make adjustments, okay? That's what I'd say about that one. But there's no buy signal in it at the moment. All right, so that's Grubhub. Thanks for bringing that one up. All right, so let's see what else we got here. Sotri. I have entered a small long in Bitcoin at 11.2 with a stop below the 50. Okay, well, let's see. So what's the price? What's the price? Let's go back to Bitcoin. Sotri, what is the price? Because I don't have that moving average on this chart here. So what is the price of that stop? Because the structural place for a stop right now is around here. All right, which is basically, what is that? That's about 11,000, 11 even. But price, remember, price can fool around that whole number. So usually the thing to do is put it a little out of reach. Okay, so like maybe like the 985 level or something like that, or maybe even 950. I mean, that's kind of low, but a lot of times, as you guys saw with Ethereum, When you put them too tight, they knock you out, and then the thing goes to new highs, right? I mean, I had that nice swing trade in Ethereum that we sent out, and it activated and everything else, only to get stopped out and then watch it go to its second target. So that's why you have to kind of put those stops out of reach a bit, in a place where Bitcoin really has no business going there if it's going to be strong, right? So 950 is probably a good place. 10,950 is probably good for that. Okay, so I hope that answers your question there. Oh, and also, Sotri, it depends on the type of trade you took too. If you're talking about a swing trade, that's one thing, because I would expect your targets to be, pretty of the same magnitude. So if you're long from 11.2, I would expect your targets to be, pushing into the low 12s or something like that, instead of like 11.4, because then it's not worth your risk. Okay, that's why it's very important to make sure that you have everything very well defined before you go into the trade. Is it a swing trade? Now, if it's a day trade, it's a different story. So just keep that in mind. A day trade meaning, you're only looking to make like maybe 300 or 400 points, then you can't be risking 1,000 points. And a tighter stop would be justified in that type of situation. All right, so wanted to just point that out. All right, so what else? Buy puts on Zoom? No, okay. DJ, I don't trade Forex yet. Okay. All right, so we answered that question. Okay, the only thing that stops me from trading Forex is margin. Well, DJ, it's margin can be good and it could be bad, right? As long as you don't abuse it and do things, that can get you into trouble, then it's okay. Because it basically allows you to see the way in Forex, the margin is funny in Forex because it's automatic. You really have no choice. It's not like you could say, okay, I'm going to use this on margin and this on, not. Everything is calculated with the margin as part of it. So basically, it allows you to tie up smaller amounts of capital. And that's pretty much. You just have to be responsible with it, just like anything else. And as long as you're sticking to like your 1% risk or 2% risk, that type of thing, then, even if you're wrong 3 or 4 or 5 times in a row, like we were, like the dollar franc, we're fine. We didn't get hammered because we lost 3%, on 3 trades. That's pretty good, considering each time that we took a trade, the potential. If that thing had bounced, we would have it would have been a really nice trade. And we're looking for the same type of action from the dollar franc, as well. I may have said dollar franc. I meant dollar Canadian. I don't even know what I just said. All right, guys. So let's see what I have next here. Okay, BNB USDT. Okay, Shayshank. And Shayshank, thanks for your participation. I know it's like what 2 a.m. over there or 3 a.m. So that means a lot. I know many people here are in the Eurozone, or they're in these time zones where it's like, midnight or some kind of crazy hour. So I really appreciate you all spending time with me here today. That's why I really want to make it worth your time. All right, so Binance Coin. Yeah, I was noticing this one, Shayshank, the other day. When I was looking at the prices, I'm like, Binance Coin? Is it $25? Is that right? What's so valuable about their garbage coin? I mean, I remember when Binance Coin, was like worthless. And I just, haven't really paid much attention to it since then. So anyway, so your question, missed a couple of, okay, hold on a second. Let me just get back to my spot here. Okay, right. So look, just like this is most likely going to be sensitive to Bitcoin. You have this bearish pin bar developing right now. And this broke out of this consolidation. It's not even a failed breakout because it's pretty much beyond this zone. I mean, it's going back into the zone. So you can't do anything with this right now. All right. So the best thing to do is look for inflection points. If it's something you want to buy, first thing, look for inflection points. You have one here. You have a range low area right there. You have this old resistance, new support over here. You have some little price action. Well, this is it's too small. You have something over here. Again, what I'm doing is very subjective and discretionary, but I am picking, previous resistance levels, which have a tendency to act as new support levels, right? There's no guarantee that they will, but a lot of times you'll see some kind of price action there, some kind of change. Whether that change follows through or not is a different story, but those are at least higher probability inflection points, right? So as far as buying something like this, yeah, you'd have to wait. And this, pulling back to this old high right here, this is a tough spot, okay? What is this, 23.83. So basically like the high 23s. It's a tough spot because it's so close, okay? I'd rather see this thing pull back in either to the middle of the range, which is around, what, 22, or the range low, or get the failed low. And you could get something like that if Bitcoin pulls back further. If Bitcoin, because again, Bitcoin is the leader. So if Bitcoin doesn't really pull back and just fakes everyone out, you know, the ideal situation for this coin would probably be somewhere in there. If you get the reversal, somewhere in there. And that's, you know, I always talk about it's not a good idea to buy inside of a range, but if you get that buy signal after a breakout, and it's basically following a breakout and it's pulled back, that's actually a decent buy signal to take then, because you're going to have a lot of people banging it out, right? And then there's a good chance that it's just going to test that middle of the range, which can be a support at times, and then next thing you know, it's pushing back toward that high. So I would watch for that. Okay, so thanks for bringing that one up. And you would obviously measure your risk off of this 21.5, or maybe even it'd be wise to just go to the whole number 20, you know, which really, if this thing is going to stay strong, it should not go that low. All right, if it's going to maintain this bullish structure. I mean, at least you got a nice bullish structure working here, so that's good. All right, so that's that one. Let me see, what else do I have here? Kev, missed a couple of streams. Roku. You know, so Roku, the most recent breakout, no, we didn't get involved in this. I had a Roku, I called a Roku trade way back when it was like at $100. Okay? That was a while ago. I think it was over here somewhere. And we got out of most of it. I think we got out of all of it at our second target because it started to give us a hard time, and we got out of the whole thing. And I forget where that was. I think it was this move right here. We caught this, and then like it pulled back. I don't know, it was somewhere around there. I forget the trade. But anyway, the point is, we haven't been involved in it since then. Because, I mean, for one, you can't chase this thing. Right? This thing's just been breaking out and breaking out and breaking out. And, oh, you were in that? Oh, nice. Yeah, so hopefully you made something in that. Hopefully you held it to the third target, because we didn't. We had the third target at, what was it, 136, I think was the third target. And this thing right now is fooling around at, 180. So, yeah, we didn't get back into this thing. So the thing is, so you had this consolidation here. This was tough because, again, we're very cautious with the stock market right now. And, yeah, well, you could say that after the fact, sure. It's a nice, easy consolidation to see. There was a nice, clear range low there. But, again, why we've been very cautious with these things is because the stock market position, at any moment that thing can turn, and it has not turned. So many of these things that were preparing to sell off, because this could have been mistaken as a head and shoulders. As they were preparing to sell off, they got squeezed. All these shorts obviously realize they're wrong, or whatever, and you see a vertical move like this. Many stocks have this situation. So, when we see this, we miss it, it's okay. What are we going to do? We have to move on. We can't worry about it now. Not going to buy it here. If we weren't buying it here, we're not buying it here. So now we just need a retrace of some kind. If this thing can pull back, into this area, which is what, in the 150s, then we'll be open to it. But if that NASDAQ is looking really weak at that moment, like if it's starting to develop into that pullback, then we're going to just step aside. Because here's what you have to understand. You know, the NASDAQ, and let's go back to the NASDAQ because this thing is going to be sensitive to the NASDAQ. So many stocks, like here, let me bring up another one real quick. What was it? Iovance, that was another one that we had to stay in for a while, right? They're having these vertical moves. I showed you Workhorse, right? That one was pulling back a little bit. Another one that had a pop was Harp, right? Remember this one? And look, it's trying to find its way back. Again, we exited 2 targets on that one and, you know, never went to its 3rd target. But you see, it's not really going lower either. So these things start to pop. Let me see, how's Jumia doing? Look at this. This one hasn't come back yet. They start to pop, and, you know, if you're in it, great. But if that NASDAQ starts to pull back, then, hold on. Like, when you see something like this, and we're going into the election cycle, okay, and this thing is just at a relentless high, at some point, that uncertainty has to unfold, right? And that's why we don't want to be in a bunch of stocks when that comes out of nowhere. So, so I hope that answers your question. Shashank, this coin is showing something, BNB USDT. Okay, I don't know. Maybe that's an old question, so I just went over that. Yes, we went over that. Okay, so let's see, what else do we have here? I'm just reading the rest of your questions. I sold my BNB at 22. Oh, nice. All right, well, look, nothing wrong with that. And never feel bad if you sell something at its high or near high and then it goes higher. I mean, what are you going to do? You know, you're taking money off the table. There's never anything wrong with that, okay? Especially after a bearish pin bar. Like if you had held it this whole time and you see a bearish pin bar develop and you don't sell anything, like I can understand if you want to hold on to some long term and give it a try, okay. But if you see a bearish pin bar develop and you don't take anything off the table, it's really a bad idea. That's just, you know, now you're being hopeful where it's giving you a clear sign that, you know, selling activity has come into this thing and the momentum is likely to reverse, just like on that euro chart that we just looked at before. So if you haven't taken anything off the table, here's your sign to take something off the table. And then you see how far it pulls back, and then you can always add back what you sold. You know, if you want to hold on to a small position and see if this thing has more of a move. And it's possible, since Bitcoin, you know, at some point, if Bitcoin does not sell off and does not break below 10.5, it's probably going to start testing those highs again, and you're going to see all these things follow. So it's not an unreasonable idea to hold on to a small position and try to ride out that broader move. You just have to be able to ride out these, you know, a lot of this noise. Okay, so Shejin, BOSCH, what is that? Is that a coin or something? Is that a stock? Let me see. It's not a stock. Maybe that's a coin. Maybe you could put the ticker in there. I don't know what that is. Regarding the question about videos, yes, they are long, but I feel they are valuable. Every chart is different, and I like to practice when you go over and explain. Okay, cool. Okay, yes, very true. You have made me very cautious with most stocks. And, you know, it's okay to be cautious. All right, here, let's take a look. So you guys have any more symbols for me? You know, while you guys are coming up with stuff. And that Bosch, can you give me more of a specific ticker on that? So look at the S&P, right? I mean, how could you not be cautious in this situation? You know, okay, cool. So it's a stock. All right, I'll look that up. Is it on the what exchange is that on? Okay. All right. Oh, so it's probably on a different exchange. All right, I'll look that up in a second here. So when you have a situation like this, Kev, like you have no choice but to be cautious because at any moment this thing can turn. You know, if we were at different levels, like when we were pushing these levels, it's like, okay, you know, this thing still has some room to run. We'll see if they break highs, blah, blah, blah. And we were rotating in and out. But now at this point, this is not a time to be complacent or a time to feel safe or a time to say, okay, the stock market is in good shape and it's going to go higher for the next year. I'm just going to keep buying stuff, especially going into an election where there's a lot of uncertainty. And again, at a moment's notice, some little piece of news can come out, and next thing you know, And then everyone will be caught off guard. Where did this come from? All the people on Robinhood. I'm stuck in these stocks. How do I get out? So anyway, all right, so BOSCH. Let me take a look at it. I'm going to pull that up here. Thanks for sharing it. Let me see. It's a stock. Okay, here it is. Oh, it's on the, I see it's on the Indian stock exchange, right? That's the Indian stock exchange? Yeah, it's in rupees. Okay. So let's see what we have here. Now, first thing I'm going to do is look for inflection points. Let me see what I have here. I see this right there. Okay. You have some in here, right about there. And let me see what else you got. You have this old resistance right here. All right, so as far as inflection points, right, that's what you're dealing with right now. You have a nice recovery structure that's been in play, obviously off the March low, like many other things. So you do have a series of higher lows and higher highs. That's good. And it looks like it's pretty much made back most of this pullback. Now, it's obviously in a support area right now. And now look at this. So DJ, this is a good example. You brought up that one before. Which one was that? Not Groupon. I can't think of the name of it right now. You brought up that stock before that we looked at, and it had a bearish close, right? Now, this is kind of similar, right, as far as being at a support, higher low situation, but bullish close. You want to see something like this, okay? On top of that, you do have this higher low consolidation, so you have those things going for you. The next question you have to ask, though, is what kind of risk are you facing if you get into this? Well, look at the high. What is that? 13,060 rupees is the high. So you need to take that out tomorrow, for one. And then you have to look at the low, which is 12,400. So you can't put your stop just below that low, because if there's any kind of noise, you're going to get knocked out. So you need to put it sort of out of reach, all right, which would probably be slightly below that 12,000 level. So you're going to have to take some risk, some significant risk on that. And the question is, you're looking for this thing to make a run for that high. In theory, it should make a higher high. That's what it should do based on this structure. But of course, there's no guarantee that you're going to get that. So if you're willing to take this risk, and let's see, the halfway point, it should be within reason to sell some over here, around there, 13,826. So you're buying this thing around basically 13,100, around there, maybe 13,70,070. So yeah, and you're risking like what, like 1,000 points thereabout, something along those lines. Because if you're wrong, you're going to be banging it out just below 13. I'm sorry, 12. What's the low here? 12,400. So something like that. You have to see if it's worth your risk. Okay, your stop will be around here somewhere. Yeah, around 12 even. And so yeah, about 1,000 points to try to make a little over that. So it's got to be slightly over. It's slightly over 1-to-1. So it could be worthwhile if you're interested in something like that as a swing trade. And if it goes for a run and tries to take out this high, then you'll be in good shape. But if it starts to give you some green, it's wise to reduce your risk as it starts to pay a bit, because when these things turn, like we saw with like Workhorse and stuff like that, and Harp, it's like, oh, I should have taken something off the table. Always get in the habit of taking something off the table, even if you're taking a portion off at slightly less than 1-to-1. It's about reducing the risk, okay? Because the portion that you hold on to should put your reward risk over the 1.0 level. All right, so okay, so I hope that answers your question there. And let's see. Yeah, the S&P is just it's in an area where it's definitely worthwhile to be cautious. Now, this environment is good for people that have small exposure, like day traders, for example. If you're in and out, you're buying something, you're making a few points or whatever it is, and you're closed out by, when the day is over, then hey, this market's great, because market goes higher, you buy whatever, you get out, and if that pullback comes around overnight or the next day or whatever, you're not caught off guard because you should be flat, right? That's really the kind of environment that, that where you can take risks and not have to worry about that broad risk, as long as you get out of your positions each day. Some people don't, and then, now they're taking enormous risk. So, all right, Kev, I agree. Oh, I appreciate the perspective. Oh, I'm glad that, Kev, that you're able to separate yourself. It's the human emotions that make us all, that give us that tendency to be part of the herd mentality. I talk about it a lot. It's not like I think I'm better than everyone else or anything. It's just I've become aware of the herd mentality, and I had to really fight off that human nature part to avoid wanting to chase or wanting to do this or want the urges that we get. It's human nature. So people that have no control over that, they just let it play out. Doesn't matter how smart you are. It doesn't matter, what kind of job you have. None of that matters. If you can't control your emotions, then it's going to be very hard to time markets, because this is really a psychological game, especially on the smaller time frames. Okay, so let me see what else I have here. Hamid, hey Hamid. Let's see. Sure. And thanks for showing up to the webinar the other day on YouTube. And I know you've been in the chat room stuff, and everyone else that came to the webinar. For those of you that don't know, I did a webinar on hands-on options. I was trying to show people how to place options orders. You could see that webinar on this channel. If you look at the videos on this channel, I simultaneously broadcasted it on this channel. So if you could take a look at that, if you're interested in options. Hamid, could you please look at PRFT? Yeah, let's take a look. So, Hamid, you say that it has strong fundamentals? PRFT. Interesting. Okay, hold on a second here. And let me just check. How am I doing on time? Oh, okay. Wow, I'm getting there. All right, Hamid, so let's take a look. Proficient. So let's take a look at the inflection points. Nice close. I could tell you that. By the way, if you're new to the Greenbridge Investing channel here, make sure you register for the channel so that you get a email notification every time I do one of these or when we do our podcast. Also, if you like my video, please give me a like. I would appreciate that a lot. Let me know I'm doing a good job. And check out our website at greenbridgeinvesting.com, where we have swing trade signals by text and by email. We have portfolio management ideas and a chat room where we share perspective each day. I know you guys, I'm sure you're tired of hearing that, but I only said it twice today, so you guys should be good. All right, now, proficient. I mean, Hamid, are you in this thing? This is nice. This is a great close. If you're long something like this, at this point, there's no reason to do anything but besides let it ride, because that's a nice strong close. That's what you want to see your stock do at the close of the day. Now, you are coming up against the March peak, right? We had this problem with the S&P. As you saw, the S&P blew through it. But this thing has been working its way. Now, if you're not in this thing, if you are not in it, you can't chase it. This is a tough one to chase. I mean, I guess you have a breakout here. You can, if you really want to do something with it, you have to look at your risk, right? Your risk is at basically 43 is where you would define your risk from right now. And this thing is at basically at 46. So right off the bat, if you get involved in this thing like after hours or tomorrow, you're risking $3, okay, right off the bat. Now, what's the potential on this thing? Well, I can see it's got some room here because it's likely to test that March peak if the broader market cooperates and you don't get caught in the pullback that's likely to come over the next month or two. It's just a probability thing. There are no signs of it right now in the charts anyway. But 53.76, so you're looking, and that's like a best case situation if it can test that. You always have to look at less. It's better to be more conservative. We're very conservative with our targets because we want them to get reached. We want a better chance of them getting reached. So a lot of times, I'll be looking at in the halfway point around there. That's a reasonable place for it to reach. So you're looking at around that 50 level, okay? So you have to ask yourself, are you willing to risk $3 or a little over $3 to try to make 5, that's worthwhile reward risk. All right, just keep in mind you're also facing that broader market risk. And like I caution everyone, you want to take some of these buy signals, okay, you know, no problem. It's good to participate in the strength that we see. Just be prepared and don't overload. You know, by not overloading, and you know, if the turn comes, you won't be caught off guard. That's all I'm saying. You know, if you have a smaller position or you don't have like 20 positions on, and you know a few of them turn red, you're going to be like, oh, okay, no big deal. Not only that, but when that broader pullback comes, once it completes, we're going to have a nice buying opportunity, and that's what you want to conserve your capital for. That's when you want to be more aggressive. Okay, and they'll be. I mean, I remember at the March lows, there were so many stocks to buy. You couldn't buy them. Obviously, you couldn't buy them all, but there was so like every stock that you looked at was pretty much a buying opportunity. You know, so I'm not saying that we're going to see that type of pullback, but if we see like maybe 20% of that, something like that, it's going to be a nice buying opportunity, and you want to have your capital prepared to get back into things. Okay. Especially when all the Robinhood people are banging them out. So let's see here. So I hope that answers your question. And that's great that it has strong fundamentals. Something like this, you know, also, if you have a small position, okay. Something with strong fundamentals obviously is good as a longer term hold as well if you believe in whatever they do long term. I'm not familiar with this. So it's nice to try to hold on to some and let it run, let it do its job. And you know, reduce risk along the way, and then add it, you know, buy back when you have the chance, right? So in a situation like this, you know, tomorrow if you break above today's high, it wouldn't hurt to add a little bit more, since you have a position and it's obviously green, it's doing well for you there. You're buying a strong stock in a strong market. So just something to keep in mind. Just be nimble. That's all I'm saying. Okay. Now, Shajin, okay, no problem. Shayshank, no problem. DJ, is there anything similar to the... DJ, that's a good question. DJ asks, is this anything similar to the 2000 stock market? Actually, yes, it's starting to get that way. Because here, let me show you why. You have these ridiculous stocks, okay? Oh, look, this one pulled back today. This one pulled back 59 points, okay? You're starting to get some ridiculous stocks that are moving ridiculous amounts of money. There was another one. I can't think of the name of it, but some of these stocks are moving like on the average, like $7 or $8 or $10. Was it this one? Was it Broadcom? I can't remember. Avgo. I'll look at this. How much? Look, this thing's up $15 today, right? Other stocks. Let me see. What is it? NVDA. Well, that's an expensive one, but let's see how much. Up $20. So obviously it was higher than that. Then you have cheaper stocks. I mean, where's Pinterest? What's this thing? Okay, it's only 43 cents. All right, that's real. Okay, forget that one. How about Groupon? That one's been showing some numbers. All right, $2.44. Okay, that's not that impressive. But my saying is, back in those days, you know, you'd walk into I used to work in a day trading office. There were a lot. There must have been about almost 200 or 300 guys in there, and you'd look at their P&Ls, because in those days you couldn't turn the P&L off on the computers, right? We had these really antiquated order entry systems, and you'd see on everyone's screens 25K, 50K, 50K, 25K, 25K. I mean, that's how ridiculous it was. And I'm sure there's some, I mean, you don't have those day trader offices anymore. They're very rare. There are a couple left, but they're rare. But my point is, they were making that money because all the stocks were doing were just going higher, right? So they'd buy 1,000 shares, go up 10 points. Hey, it's $10,000. Great, right? So yeah, it's getting frothy like that. I mean, I thought it was frothy before, but this is getting ridiculous. When you see like the NASDAQ doing stuff like this, and the S&P, where it's just high after high after high after high after high, this is just it's overdone, and that's okay. Like I said, we don't want to have opinions, and we don't want to start shorting this thing. There are no sell signals in sight. There's nothing on this chart that says sell. There's just nothing there. But when you have something that goes like this, I mean, the entire month of August, look at this, right? Just the month of August is from here to here, right? Pretty much just the whole, you could have just bought at August 1st and sold everything, you know, August 31st, and you would have made money. But when things move like this unnaturally, when they retrace, it's going to be harsh, okay? Because a lot of this is hot air. That's what you have to realize. So when they retrace, it's going to be sharp. It's going to come out of nowhere, and that's what you have to be prepared for. You're going to turn on the TV, and they're not going to know what to make of it, and they're going to look confused, and they're going to amplify the fear even more. In those situations, if you're prepared, you know what you're waiting for, and you don't react. That's just like Bitcoin right now. You cannot react. You have to say, okay, these are the scenarios. Either I get this one or I get that one, or maybe the market throws something else at me, but these are the levels I'm looking at, and at these levels, this is the action that I should be considering if I get a setup. Like, you have to have your plan all in advance, and then you'll be much better off. Because if you just get consumed by all the nonsense and all the drama that you're going to be seeing, not just on TV, you're going to see it on Twitter, you're going to see it on Facebook, you're going to see everywhere you look. Your friends are going to tell you, oh, did you see the stock market today? It's minus 2,000 points. What do you think? It's going to go to zero? You know, so you can't get distracted by any of that. You have your plan, you have your levels, you have your setups that you're looking for, you have your scenarios, and you are prepared, okay? Whether it's exiting positions, whether it's looking for a new buying opportunity, you need to be prepared. So that's what I'm saying. And like I said, yeah, I know it's a very long answer, DJ, but okay, you got me on a rant there. So yeah, that's what I have to say about that. Good question. All right, so let me see what else. Can you look at Omisigo? Sure, HS. I wrote a nice, I did a video about that, OMG, USD, and I warned people about this. I wrote a TradingView article about this, and I said, here we Omisigo again. Okay, I was trying to be funny with the title. I know DJ appreciates my cheesy titles. But yeah, I hope you're not in this. That's all I can say. This was all herd mentality right here. I warned about this. At this point, you have this consolidation, right? Shouldn't have broken. First of all, this wasn't a very attractive consolidation to begin with, because there isn't really much structure there. And after such a move, when you get something like so sharp like this is likely to give you a more complex consolidation, and that's what you're getting now. You're getting like this three-leg situation, right? Leg A, leg B, leg C. You're getting something like that. So at this point, it's following along with Bitcoin sell-off, and if Bitcoin finds its low sometime soon, this will probably fake out, you know, and give you a bullish fake out as well, which is what you'd want to see. This is a much better location to be looking to get back into it. You know, so if you can get an inside bar here, or maybe a failed low, or some kind of structure besides this bearish candle, then it's probably, you know, it's a much better location, okay? But the thing is, your next inflection point on something like this, if it doesn't find support soon, and basically Bitcoin breaks its 11K, you're probably looking at like something around here somewhere, which is around $3, okay? So those are the 2 points I'd be looking for, like around this, what is this, $4, $4, $5 area, and like $3. But you need reversal structure, and you need some sort of candle, some sort of bullish reversal candle, telling you that you're not the only one buying. Right now, none of these things are longs with these candles that we're looking at. So yeah, I would hold off on that. At least you're not buying the high if you're not in it and you're looking to buy it. You just need to wait for a setup and some sort of confirmation. And we will most likely see that setup across the board, okay, starting with Bitcoin. So I hope that answers your question. I know I'm talking too long here, guys. Let's see, where am I now? Let me see how I'm doing on oh yeah, all right. So I'm going to wrap this up here in a moment. Let me see if I could just get to the rest of your questions real quick. So that's OMG. XRP, sure, let's do it. Shay Shank, I have to go out of my way for Shashank because this poor guy, you know, it's like 3 a.m. over there in India, and this guy is hanging out with us here. So, you know, I'm not going to leave you hanging there, Shashank. XRP. So now his question is, good buy here? Okay. Well, you know, it looks like that Bitcoin situation. A lot of these are going to look like Bitcoin, right? We had that nice attempt higher, and now we see this bearish outside bar. This is an outside bar. So no, this is not a place. The location is okay, but there's no reason to get in, okay? You do have like a failed low right here, right? This is good. It's around that 26-cent area, around there. And now you're starting to retest it again. So Shashank, as far as the location, yes, I agree. The location isn't bad, but you need a reason to get into this thing, and that's what you're missing right now. So what you want to see is something like this. Look, nice inside bar, green candle following this red candle. That would be nice if it can appear in this area. But keep in mind, these things don't really trade on their own, right? We could see Bitcoin pulling back. This thing's pulling back. So try to use Bitcoin as a gauge, right? When Bitcoin gives that next buy signal, if you like XRP and you see the setup developing in XRP, then you can measure your risk and at least you have Bitcoin going your way, even though you're not buying Bitcoin. So that's kind of like, you know, how we use the stock indices as well, right? For relative strength. Bitcoin is sort of like your index. So just wanted to point that out. Thanks for bringing that one up. HS, can you look at, okay, yeah, all right, so I answered that one. Well, Omisigo and USDT, yeah. Well, I mean, Omisigo, all right, so OMG, I looked at USD, so USDT, it's going to be the same deal, okay? It's pretty much going to be the same situation and the same levels, right? So you have that, which is what's around 3.5. Oh, they may be slightly different, but it's really not going to make a dramatic difference because Tether is pretty much the same as the dollar. You have no signal to go long, and Bitcoin is your leader. You know, you have this same idea. There's no structure really in this attempt at a higher low, and now it's established itself as a lower high. So I wouldn't call this bearish just yet. It's just part of a corrective consolidation. You just need a buying structure to develop. You don't have that. So I would stand aside until that comes along. And again, that same or similar signal should appear in Bitcoin. Okay, so just something to keep in mind there. So I hope that answers your question. HS? Okay, Hamid, cool. Hamid, could you please look at AMWD? Okay, let's take a look real quick. AMWD. So, all right. Strong. Look, right off the bat, you can see the stock is strong. That's great, right? Pretty much recovered off those March lows. So you have this nice, generally bullish structure that you're working with. You have this nice consolidation. I don't know what this is right here. I don't know if this is a bad tick. I don't know if that was an earnings report. I don't know what that is, but I don't like that. But okay, that's no big deal. What you do have though is this structure right here is a higher low consolidation. That's good. So when you see that, chances are this thing should at least have another attempt higher. You're going to need the market to work with you, and so far there's no sell signal in the market, but I just warn you, you know, be cautious with these things. You're likely to get something like that. As far as your next resistance that you should be looking for in terms of targets, you probably got this up in here. You have this gap, right? Well, that's sort of relative to that gap. And then you have something like this over here. So you're getting close to your, well, those would be some inflection points to look out for. Okay? Hey, no problem, Shashank. So you're looking to, you know, and the other thing is your risk. Right? Where's your risk on something like this? Well, you're going to measure your risk from these lows around there. That 80, so 86.71, you figure it's going to be around 85-ish. You have to give it a little more room. All right, so if you're buying this thing at around 90, in the low 90s, you're risking about $5 or $6 to try to make almost 10. Because again, you can't. There's no guarantee that that it's going to reach these points, especially if the market turns between now and getting there. So I'm not trying to scare you. I just have to mention that. So you figure what's halfway in between? 97-ish, so the high 90s. Plus, 100 is going to be a psychological inflection point. People are going to be selling at 100. That's just a typical herd mentality thing. So you want to at least, if you get involved, you want to at least be reducing risk before 100. So I think the reward risk still makes sense. You're risking about $5 or $6 to try to make, about $6 or $7. So it's about like a 1.2 reward risk, something like that. And if it goes further, great. But you want to look at your conservative targets, not aggressive, right? You always want to go by that first. And then if the market wants to pay you more, that's why you have target 2 and target 3. All right. So I covered that one. Nice one. Thank you for bringing that up. And okay, Abhishek. Oh, cool. I appreciate that. Can you look at Jamia? It had a good run. I pulled that up real quick before. I'll pull it up again. I didn't really talk about it. Sure, I'll pull this up, and then I'm going to wrap this up, you guys, okay? I really appreciate all the participation and all the questions, by the way. Thank you for joining me, especially if you're in, parts of the world where it's like midnight. So, yeah, this thing, we've been talking about this. It had a great run, and now it's acting like garbage, okay? This is what happens to herd mentality people, people on Robinhood and stuff who don't know, and they buy into these highs thinking they got the next Amazon or whatever, and then you get stuck in this, right? So at this point, this is a better price, obviously. You're not buying the high, but you're lacking structure, right? Right now, this right here is hardly an attractive price structure to get involved with. And I say that because something that's preparing to reverse usually doesn't look like this. It usually has more of a symmetrical double bottom type of situation. This right now looks like it's setting up to be a lower high. So if you're not in it, I would avoid this thing until it gives better structure. Now, one thing you can wait for, because sometimes there's no guarantee a market will deliver structure. Sometimes it just, for whatever reason, some news comes out and it just breaks. So one reference point you can use is like this resistance here, or, well, this one's kind of far. So you can use this one. If it clears that resistance, which is basically the $11 area, if it can clear that, test it and close above it, that would probably be a better sign that this thing is in a better situation to start getting into. This one may be a good candidate for long calls too, if it can experience one of these moves again, because I'm sure you can get those long calls a couple of months out really cheap at these out of the money prices, I bet. I don't know what the premiums are, but they're probably really cheap right now. Okay, so okay. Well, yeah, so I would there's no technical reason to get back in yet. In fact, this thing may have another leg lower. Based on this structure right here, I would anticipate another leg lower. Maybe a small leg, but at least you're looking at this area around that 7.5 area. It's possible that it can test that. And if it does, you want to just stay out of this thing's way. Now, if you really, really like the stock, and you must get in, one thing you could do is you can start out very small. So if you normally trade, let's just say I'm going to use 100 shares as an example. If you trade 100 shares, perhaps you buy 10 shares, okay? And it pulls back further, you're not going to care. 10 shares is not going to, it's not going to make you worry or anything. And then once it starts to develop its structure, you keep adding another 10, another 10, another 10. Next thing you know, you have 100 shares from a nice average price. And now you have your reversal structure at that point. And then when it breaks out, you throw on another 100, right? So, I mean, you could manage it like that. If you really want to have a piece of it and you're like, wow, these prices are so low, how much lower can it go? I mean, it can go lower. So by starting out small and staying small until it starts to give you better structure, you at least stay out of trouble. Okay? Remember, Abhishek, when the market the stock market, this is likely, this is not a big stock market follower, right? Obviously it does its own thing based on news and stuff. But you know, this stock market is in a position to have a significant pullback. It's been this way for a while. And like I said, when it comes, all these little stocks and a lot of stocks, they're going to feel a lot of pain. So you have to be prepared. Okay, I can't say that enough. Doesn't mean avoid your stocks. Get involved in things like you know, things that make sense in terms of reward risk. We went over plenty of reward risk here. It's just don't overload yourself. Okay. Yeah, right. Yeah, he was on top of that one. Yeah, him and I think Henry actually found that one. So, oh no way, cool, cool. That's great to know. I'm glad that was a big trade for you. So yeah. Oh, Mitt K is another one. Uh-oh. Uh-oh. DJ's a Robinhood trader. But no, but he's an informed Robinhood trader because he's in our chat room. See, it's all the other Robinhood traders that he makes money off of. Cool. All right. No, nice. Nice. Yeah, Mitt K. That was another one that Andrew called. He's been on top of that one for a while. Mitt K. Oh, look at this one. Wow. Very nice. All right, you guys. So I've been talking for a long time. Again, I appreciate all your questions. I'm going to wrap this up now. I want to thank you all for joining me today, you know, for this analysis session. And we'll do this again. If you have any other questions, please, you know, you can always ask in the chat room. We try to get to as many as we can in there. And if we miss one, just ask it again. And if you're new to Greenbridge, please subscribe to the channel here so you get an email notification from YouTube when I do one of these. Please send me a like if you like the video. Please give me any other feedback that you have. Also, greenbridgeinvesting.com, we have swing trade signals by text and by email. All right, swing trades, not day trades. I always have to say that. Portfolio management ideas, as many of you guys know because you're in them. And chat room where we share perspective and analysis each day. And we're, you know, when I do these videos, a lot of times we're talking about a lot of trades and ideas that originate from there. Okay, you guys, so thank you again very much, and enjoy the rest of your day, and I'll see you next time. Thank you.